All right, so we are milking crash 300 right now. This is the entry. I had to take more positions when I realized that it was actually going to give us the candlesticks that we are targeting. So I had to add some more positions here, but this was the first entry, and this is our SL. All right, immediately after we entered the market, it started moving to the upside. Okay, so I'm going to be showing you guys how to take out a couple of candlesticks, all right, from every crash market, be it crash 300, be it crash 1500. All right, you can decide to not catch spikes, all right, and just scalp. Okay, and just scalp. So this video is just about you scalping. You can see on the VIP group we are already we are winning. Yeah, we are winning. We've been on the winning side for a while, right? We've been on the winning side for a while. So I just want to watch this hit our first target. All right, hit our first target, and then I'll continue with this video. All right, so the purpose of this video is just to show you guys how you can be buying conveniently from the crash market without being caught up with spikes that will ruin your account or your trades, right? So I'm not saying spikes won't come. I'm not saying you can totally avoid spikes in the market, but knowing when to enter the market such that whatever spikes that comes in will not harm your account, will not harm you, will not like in the case here. Let me show you guys. Yeah, like you see, this was my entry and this is the last entry I took here, and then the first ever spike was this little one here. It did not even get close. It did not even get close to the entry. All right, and this was the other spike we saw in this trade. We just hit our first target. We just hit our TP1. All right, we are moving on to the next one. Okay, so the positions I had here are out. Okay, just this one's left, right? I mean the position I had here. Yes, of course, this is the position that was here. The first entry just hit TP1, and then we are moving on to the next target. Okay, although this area looks as though price is going to want to pull back a bit around this level. All right, so generally you will hear that to catch boom and crash spikes you need indicators and all of that, but trust me guys, if you can see the direction of the market for yourself without the use of these indicators, you stand a chance of winning better than when you are depending totally on indicators. Okay, so I was saying the next spike that happened, all right, it was quite scary though, but it did not still get close to our entry. This was, remember, our first entry was around here. You could take a couple of candlesticks and leave the market if you know the direction of the market. Okay, you need to know the direction of the market. You need to know where exactly is the key turning point of the market, the key reversal point of the market. All right, the key reversal point of the market is what you just need to know, and also the direction of the market is also what you need to know. And then if you're able to tell these two, what you should do is look out for candlestick patterns. If you know a few candlestick patterns that works for you, good. If you don't know a few candlestick patterns, or you don't know any candlestick pattern that you comfortably can wake up any time and say, yo, this is this particular pattern, then all you need is for you to just understand how the candlestick moves, right? You don't need the patterns. You don't need, I'm not saying they are not relevant, I'm not saying they are not necessary, yeah, but you can do without them. That's what I'm trying to say. You can do without those patterns, but first of all you need to understand the direction of the market. You cannot be trying to avoid spikes when the market is selling. This is for crash markets. I mean, you cannot intend to buy the crash markets when the overall direction of the market is going downwards. All right, you stand a chance to catch spikes, a lot of spikes, when the direction of the market is downwards. All right, when the direction of the market is downwards, you can catch spikes. But when the direction of the market is upwards, you can scalp, you can take a lot of profit out of the market, right? You can even make as much as $1,000 from just one single trade, scalping, right? I mean, you can trade from as little as $100 to $1,000 just scalping. All right, but how do you do it without being caught up with spikes? You just need to know the key turning points, you need to know the direction, and you need to understand the candlestick movements. Okay, so for the key for the direction, let's look at the higher time frame. Let's look at the 1 hour, the daily time frame, for example. Yeah, now you have seen that in a very long time, starting from here, in a very long time, yeah, you can see that price has just kept going upwards. If it pulls back a bit, it continues upwards. Now look at this. Price came all the way from here up to this point and then dropped. It pulled back, right? And then what happened when it got to a certain point after pulling back? Now remember, it did not even pull back down into where it started moving from. Instead, it got to a point here and then it started buying again. This time around, what happened? It even went above that previous high, went all the way up to this point before it pulled back again. And now notice that when it pulled back again, it did not still get to the other low. It did not still get to that low before reversing again. Have you seen the trick? Now this is a market showing you a clear direction. Now you see it went up, created this structure here. Let me point out the structure. It created this structure here and then it pulled back. As it pulled back, it did not get to this point, this first structure. Remember, this is where it started from. It did not get to that point. Instead, it created another structure here and then reversed again from that point. Boom. And then what happened after it reversed again? This time around, it went beyond this first structure that it created here. And then what happened? It pulled back again from the next point. All right, from the next point, it pulled back again. And you can see that there is another structure right above the first one, right above this one. All right, now what happened after it dropped from that second structure it just formed? It came all the way down and then formed another structure below. Now also notice that this other structure that was formed below, this structure here that is formed here, also did not even get close to this other, the first one here. You see the first one here? Now it gives you a slanty movement like this. Let me use the trend line to show you what I'm talking about. You see, it gives you something like this, right? Now showing you that this is where the market is going to. If it pulls back again from where it is right now, if it drops again, trust me, it just might drop. If it drops to this point where the line is here, where my trend line is here, if it drops to this point, it just might create another structure from that point. Let me use the arrows. If it drops again, it just might come to this trend line, create another structure. This is what I mean by the structure. It just might create another one here. Sorry about that, guys. Just might create another structure. Sorry. Let me just quickly. All right, so it just might create another structure here. Like this, and then go up again. And when it goes up again, it's going to go above the structure that had formed here. Now do you see? It continues that way. Unless it comes down and breaks this trend line, goes below this first structure, then that's when you might think of catching spikes, selling the market, right? Because if it breaks this structure and continues going down, there's every tendency of it wanting to retest this other structure or even this other one. But until that happens, we continue having a buy market, we continue having a bull market, we continue going to the upside with the market. All right, so now that you have spotted the direction of the market, now you need to have a turning point. You need to have where the market is going to create that structure from. Okay, that can happen on a lower time frame, and for you to easily take a trade, you need to go to a lower time frame to be able to find opportunities, right? So let's switch to the 4 hours time frame. You can see there was a structure on the 4 hours time frame that you could not see on the daily time frame. You can see here something like a turning point there, which is where we based our entry on. That's where we traded from, right? That's another structure. All right, so trying to buy, you're looking for opportunities like this. You're looking for these structures like this, right? You're not wanting to sell, so you don't want to be looking for the structures that are around the resistance level. You're looking for the structures that are around the support level. All right, so that makes you that should give you a signal to buy. So we are looking at buying, remember. So you switch to a time frame that is convenient for you. The lower time frame, I like to use the 15 minutes, I like to use the 5 minutes, I like to use the 30 minutes sometimes, depending on the market condition, right? So yeah, now you come down to, let's say, 5 minutes, for example, and you are opportune to meet the market in a position like in a place like this. All right, you're opportune to meet the market in a place like this. Now what you should look out for is rejections. You already have in mind that you want to be buying, right? Remember that, don't forget that. You already have in mind that, let me take this out. Let me check this out. Now you already have in mind that you want to be buying, so what you should be looking for is a rejection like this. All right, you need to be looking for a rejection like this. That means sellers are trying so hard to pull price down, but buyers have dominated the market. They have more momentum, they have more energy, they have more force. All right, so they ended up rejecting buyers' effort, and then they push price above the support area. Okay, and then if you see a rejection like that, if you see long rejections like that, the next thing you want to be seeing are the green candlesticks. That is the bullish candlesticks, right? I had to use the layman term for in case beginners are listening to this. All right, so you're looking for the bullish candlesticks. You want to see more of the bullish candlesticks on the lower time frame. All right, if you see this happen on your support level, that is your key turning point, your key zone, your support level. If you see that happen and you see more of the bullish candlesticks, and you see the rejection candlesticks accompanying the bullish candlesticks, right? That is a clear signal for you to strike. Now remember, this has to happen on your support, on your key support level. Don't always forget that it has to happen on your key support level. All right, that's if you are trying to buy the crash market. For the bull market, is entirely different. It's entirely opposite of what I'm saying right here. But this video is specifically for the crash markets: crash 1000, crash 500, crash 300, any crash market that you want to be trading on and you want to be scalping, right? Now when you take your trade, when you place your trade, after you've seen all these conditions, when you place your trade, you need to look out for those areas where there were key turning points on the higher time frame, right? I mean, areas like this, the resistance areas, I mean, where you had the higher highs on the higher time frame. Those are the areas you look out for, and those are the areas that you want to be exiting the market from. Okay, those are areas you want to be exiting the market from. You don't want price to come to that area before you leave. Like in my case on this trade, this is my target. This is this area here. This area is where I'm targeting, right? Because those areas are where I have the key turning points on the reversal zones, on the yes, reversal zones, the what is it called, the resistance zones. I mean the resistance zones, not reversal. Of course, reversal happens on resistance areas. Okay, so that is where I'm targeting. That's where I feel like if price comes to that level, I won't even have to wait for it to go that far. Somewhere around here is enough for me to take out my profit, or somewhere around here, because I don't know when it's going to retrace. I mean, it's going to pull back. Now your key turning points are not, there are zones. They are marking out zones for you to know that when it comes to this zone, I don't know where I'm going to reverse from, but this is the zone. When I'm here, I might just reverse at any point. So you don't want to wait for it to really enter into the zone before you exit your market and take your profit. Do you understand, guys? It's not so hard. So it's something that anybody can replicate. You need to follow it well. All right, remember I said you need to know the key direction of the market. You need to know the key turning point of the market. And for a crash market that you want to be buying, you need the key turning points that you need are the support zones, at the support levels. All right, after that, you look out for the candlestick patterns. Right now, I was taking my time to explain how you can understand the candlestick that is signaling a buy in this kind of market condition, in case you don't have a fair knowledge of candlestick patterns and all of that, which is very important for you to learn. Candlestick patterns is very important. But if you don't know candlestick patterns, or you find it difficult to identify them on the market, on a live market, right, you just need to understand that the rejections will help you. When you see a long rejection around a support level like this, like what I showed you here, and then you see it accompanied by bullish candlesticks, then that's a signal for you to strike. Okay, so hit me up if you have a challenge. If you have a challenge you want me to address, you want me to guide you, just hit me up. My WhatsApp number will be on the description of this video. I'll also leave our Telegram link so you can join the free Telegram group and make a lot of free money for yourself. And also you can check out our website for our prices in case you want to, you're in need of any of our services, VIP signals, our mentorship and all of that. Check the description of this video. You will see every information you need to reach out to us. All right, and also like this video, subscribe to my channel, hit me up if you have any problem. I will be here to guide you guys. I'm your favorite coach, Forge the King. Catch you guys later.